to your June 1st episode of the GoNoGo Show. My name is Tyler Wood, and I am joined by Alex Cole. How are you today, my friend?
I'm doing well, thanks. It's heating up down here, a few hours south of you.
It's heating up here as well, and no rain. We're drying out, but don't worry. The raised beds are getting watered every night. My daughter's very diligent.
Good.
Here we are at the month end. I figured that today's show we could take a look at a few longer term charts. Right, it's helpful to have an exercise in your discipline to zoom out from your normal trading time frame and to look at things on a little longer term view. Those monthly closing prices, we know from Charles H Dow 130 years ago that the closing price is where things settle. Obviously, daily prices are important, weekly prices even more important, but those monthly closes, we don't get a lot of them, and we need to pay attention. So, Alex, let's dive into the cross-asset heat map. We can start it here on this daily basis and just get a sense of where the overall market environment is leading us.
Well, the market's holding up really well, considering all of the news that's been being batted around. Equity markets are holding up incredibly well, really remarkably, I'd say, with some strong blue go bars showing that the go trend has been able to remain in place. Treasury bond prices still in a no-go, weakening to pink bars. Commodities in a strong no-go, and the dollar still in its go trend, but showing a weaker bar today. But interesting how these trends are holding on given the news that's been flying around.
You make a great point, Alex. If anybody in the U.S. has been watching financial news media, you've heard your fair share about a debt ceiling crisis, about the impending economic collapse and millions of jobs lost and the end of the American dream. That would certainly, the fear mongering would keep you out of any exposure to the equity markets. And as technical analysts, our toolkit offers rules to combat or to take a contrarian approach when indeed the news is either too frothy and bullish at the tops or too dark and despondent at the lows. So that's our daily look. Alex, let's bounce this out to a weekly basis to take a look at those cross-asset relationships.
Absolutely, and you can see that on a weekly basis, it's really the equity market that is still in a go trend, and you can see since really the beginning of the year, we saw that move towards uncertainty as we came off the lows from last October, and then a string of go bars now for several months. And you can see that in that top panel here, the strong blue go bars for the equity markets, whereas everything else is struggling. Interestingly, and to note, down the bottom is the dollar. So the dollar, which on a larger time frame has been in a no-go, is now showing some uncertainty, and that lines up with the strength we're seeing in the dollar on the daily chart.
Absolutely. Last summer we were talking about commodities and cash as places to seek haven from a bear market in the equities and a sharply rising interest rate environment. So let's move on to some of our macro indicators. Let's take a look at the TNX. The long-term Treasury yield of U.S. sovereign bonds. And remember, prices move inversely to the rates. So we were seeing no-go trends from a price perspective. And here we're seeing rising rates on this weekly chart of the TNX.
Yeah. And again, as so many people have pointed out, not necessarily fast rising rate environment, but just elevated rates that may sort of hang around for a while. We certainly... we saw some indecision here. We saw the go-no-go trend indicator struggling to maintain either go or no-go bars, but certainly seems to be back into go colors at the moment, with the oscillator just flipping into positive territory and now retesting that zero level from above. So certainly not back to the highs we saw last October, which sort of coincided with the lows in the stock market, but sort of meandering sideways in the go colors.
Absolutely. And let's dive into that daily view of the TNX, where we can see the price action a little more clearly and some important support and resistance areas.
Yes, I mean, this jumps off the chart. The concept of polarity here, Tyler, where you've got these highs from this no-go correction, and we're really now coming down to test those levels as support. Hopefully, I suppose, if you're on the bull side for Treasury rates. But As we've entered this go trend, price has corrected from these counter trend correction arrows and has come back to levels that should act as support. And you can see how with the oscillator, we are right back at zero. So that all lining up there as well.
And keep in mind, for those of you who use GoNoGo charts, the interplay between GoNoGo trend on our price action in the top panel, the GoNoGo oscillator in the bottom, the computations are entirely separate, but their interactions are critically important to understanding direction and momentum to these trends. So Alex, let's move on from the TNX. Let's take a look at the US dollar. Here at GoNoGo charts, we use UUP, which is an ETF proxy for the dollar index. Earlier today, I was talking with some folks about a few of the different dollar crosses, dollar yen, cable, dollar sterling, that are both turning up, US strengthening in its fiat currency. What do you see here on a daily chart of the US dollar index?
Yeah, like you said, we are in a go trend. We see some dollar strength. You can see that we are, struggling with the prior high that we had here in March. But we are definitely oscillator in positive territory, fast approaching the zero line now. So we'll look to see if it finds support, as we know it should, if this go trend is to continue. So we would love to see, if you're a bullish on the dollar, you'd love to see the dollar consolidate at these levels to find support at these areas that were resistance. And you'll know that that's happened if the oscillator indeed finds support here at the zero line and turns back into positive territory.
Absolutely. And how does this look on a weekly basis?
Yeah, so the weekly is interesting because we are breaking out of a max go-no-go squeeze. And you can see the dollar strength through all of end of 2021, all of 2022. You can see how the oscillator broke below zero on heavy volume right before we moved into this no-go correction. And now this has been mostly a sideways correction since the fall from the highs here. And we rode the zero line on the oscillator for several weeks. So a really drawn out max go-no-go squeeze. You see the grid of the squeeze rising to its max. That tells us that there's reduced price volatility as price movement shrinks during this no-go correction. So where are we right now? Well, we are at these levels that, as we said on the daily, have been resistance before. So we'll be very, very curious to see if we can break above these levels. But the oscillator breaking out of the squeeze is definitely a positive sign.
Yeah, momentum coming back to challenge that no-go trend, looking more like a double bottom consolidation and perhaps trend reversal.
Yeah, with this neckline level of resistance here, critical to get above.
Absolutely. Let's take a look at gold as the contrarian of the US dollar.
Yeah, I mean, gold's been doing a number on people over the course of the last year, where we were expecting this flight to safety that didn't come through most of 2022, and then it did start to come in 2023, and then of course we had a correction and then a return to the go trend. Well, we're in another correction now as we see no go bars and the oscillator below zero. Now oscillator is rising towards the zero line, and you can see that we are weakening that trend, showing pink bars instead of the stronger purple. But again, that concept of polarity is everywhere, Tyler, and you can see how these levels that were supporting the go trend are now being tested as resistance in this no-go correction.
Absolutely. And let's take a look at gold on that longer time frame, starting with a weekly chart, or a monthly is fine too.
Yeah, the monthly is the one that got everybody excited, this really, really long cup and handle pattern. And we really haven't had that clean break above the neckline that people were looking for. You can see that we failed several times now at these levels. So we are below again. We didn't get that significant close higher on a monthly basis, but we are in a go trend and the oscillator is in positive territory.
Absolutely. Interestingly, at the CMT symposium a few weeks ago, a month ago, we saw a lot of consensus views around higher prices in gold going into year end, and also some interesting surveys around the consensus view that equity markets may be trapped in this sideways range-bound market, at least at the index level for a while.
Yeah.
So with that in mind, let's turn our eye to the S&P 500. Let's start with the monthly view is great.
Yeah, if you want to feel good, let's start with the monthly.
But I think actually zooming out, right, helps us understand what that primary trend is. And for trend followers, the longer your time frame, the fewer trades that you're going to be required to make. So as we look at stock market history, coming out of the great financial crisis, enter to go, and it has remained unbroken on this monthly chart.
Yeah,
I think the textbook illustration of GoNoGo oscillator finding support at the zero line over and over and over again really can't be overstated. That we're looking at those breaks of the zero line as potential threats to the Go trend, where we're seeing pronounced negative momentum, and that was the year 2022. That was our bear market, and it's certainly much more broad-based, less of a volatile V bottom than we had in the COVID-19 collapse. But back in strong Go bars and building a squeeze, Alex.
Yeah,
it's really trying to decide where we are headed at the index level.
Yeah, and you can see how significant finding support here in the October lows, really sort of lining up with the previous highs here. That was important. But also when you look at a chart this long term, sometimes these moves into negative territory are the correction itself when the oscillator moves into negative territory, unless, of course, something truly recessionary happens, and then you might lead to a longer no-go trend. And also what's interesting is, there's a lot of research done. If you, Tyler, I'm sure you're familiar with looking at patterns on oscillators. And if you see this as sort of an inverse head and shoulders on the oscillator here, making a lower low and then a higher low and then coming back to test that neckline, that's very, very interesting in the way that the momentum on this move lower has started to cool. And now we're testing the zero line, as you said, building this max go, no go squeeze. So one would suppose that if the oscillator gets back into positive territory, that would be very, very encouraging for long-term price movement higher, just as it did here, just as you said, the zero line proving to be so important on these long-term trends. So if we're going to be breaking out of the squeeze into negative territory, then signs of some real trouble ahead. But if we get back above zero on this monthly go, no go squeeze, that might be quite important and encouraging.
Yeah, and certainly it jumps off the screen, the long wicks of candles in the bear market of 2022, and the very narrow range when we're talking about monthly moves here in the S&P 500, very tightly range bound over the several months.
But that's often, what is associated with a better environment for stocks, isn't it? That sort of, you can see it here, very, very small bars here as well earlier in the chart. And it's these larger movements that usually are associated with bear markets. So, take that for what you will as well.
I think it was Ralph Acampura who said, markets take the stairs on the way up, moving a little slower, and take the elevator on the way down, or maybe the guillotine on the way down if we're looking at those COVID years. Let's zoom in to the weekly chart. Let's take a look at more recent price action and the move out of no-go territory here in 2023.
Yeah, and this has been an interesting chart. We've been talking about it since the end of last year, how the oscillator was starting to find some support above the zero line, of course, and that lined up then with the uncertainty as we saw several go fish bars coming out at the end of this no-go trend. And then, of course, the turn to the go colors as the oscillator found support again on heavy volume. So now we are in a string of strong blue bars, oscillator in positive territory, and we just have a little bit of resistance to get through from earlier in the chart here.
Yeah, and I think for a lot of investors, understanding the regime shift, right, where we can give context to the fact that it's a bear market in these longer weekly charts that were in no-goes in 2022, that we perhaps fade rallies, and now in 2023, perhaps the reverse is becoming true for more investors, that buying dips will help them in their long-term equity curves. So let's dive into the daily chart, Alex, work our way down to more recent price action.
Yeah, and the daily looks strong as well. You can see we were talking about the Obviously, on the larger time frame charts, we know that that high is there from last year, providing some resistance. But you can see how in the shorter term we did climb above these February highs, and that's been positive, and we've been able to consolidate above those levels, and we see strong blue bars, and we've just recently found support at 0 on heavy volume. So fairly encouraging daily chart.
Absolutely. Now, the characteristics of the equity markets, obviously, it is a market of stocks, not a stock market. But before we move to our sector realm map, let's just look at a comparative view on a couple of the indices.
Yeah.
So how about NASDAQ 100 against the Dow Jones average, the QQQ versus DIA?
Yeah, I mean, that really shows the strength of the growth stocks, doesn't it?
Yeah, the relative outperformance of the NASDAQ, which is comprised much more of our technology and growth areas of the market, versus the Dow, just screams on this chart that on both an absolute and a relative basis, we're seeing tech outperform and growth equities at large. Absolutely. So let's move to that sector rel map and get under the hood just to compare how each of the sector ETFs are working on a relative basis against the S&P 500. And we've had another rotation, Alex.
Yeah.
We are strongly in Go trends outperforming a rising S&P 500 in both technology, communications, and consumer discretionary sectors.
Yeah.
And all of those defensive sectors that were leading through the pandemic have completely rolled over into no-go trends. Both the cyclicals, energy, financials, industrials, materials, but also defensive sectors like healthcare, staples, and utilities.
Yeah.
Any commentary here about this leadership coming from our growth equity sectors?
No, you said it all.
So in the back half of today's show, I think it'd be really helpful to look at some individual names within those technology, consumer discretionary, and communications sectors, and just take a look at some of the life cycles of the trade. So let's start with Apple. That'll make everybody smile.
As long as you've got some shares.
Exactly. Last week or earlier this week, talking with some clients in Europe, looking at an Apple monthly chart is, that's the dream, right? To have bought early and held on.
Yeah.
So on that monthly chart, right, we can see very clearly areas of support and resistance, the polarity concept that Alex has been talking about on today's show. The idea behind GoNoGo charts was to capture all of the information that we would want from a composite blended view of technical indicators, but to remove the clutter from our chart.
Yeah. Because
after all, our most important indicator of all is price. That's what dictates our buy and sell areas, where we get in and where we get out. So we want to remove any of that clutter or analysis paralysis from our chart. And that also gives us a clear view on those key areas of support and resistance.
Yeah. I mean, it just pops off the screen. I mean, and you can take the chart back further, but all the way through this trend, prior peaks line up with support so cleanly. And it happens again and again and again. And being able to see that on the price chart is so vitally important.
Absolutely. Absolutely. So let's bounce that back down to the daily chart of Apple, just so we can see more recent price action.
Yep. And you said it best, taking the stairs on the way up. I mean, that's really what you're seeing here. You're seeing the rally, the cooling of momentum, the rally, the cooling of momentum over and over and over again. And you can see how that zero line really does support the Go trend while it's in place. And just this week on Monday, we got another test of the zero line and support found once again.
Absolutely. A lot of trend followers discuss pyramiding into their positions, meaning when a security is in a trend, well-defined, and you have that momentum resurgence in the direction of the trend, that's an opportunity to add to your position, to scale up. And that's exactly what we're calling out on the price panel itself with those green circular icons. That's right. That's the interplay between the price trend and our GoNoGo oscillator. So Alex, let's move on from Apple. Let's take a look at Amazon.
Another good-looking tech stock chart. We saw a rally earlier in the year that failed, but then of course you get back into the Go trend, and this one has taken off in a much more convincing fashion. And you can see that we got above the prior highs. Again, you see that polarity there where we recently found support right at that February high. Very, very interesting. And of course, as we were consolidating and finding the support there, the oscillator bounced off zero into positive territory and gave us this continuation icon telling us we were likely to have a new higher high in price. So a nice chart there of Amazon as well.
Absolutely. And a couple of weeks ago, as we dove into the consumer discretionary sector and then looked at the industry subgroups that were outperforming, obviously broadline retailers were called out from that relative strength heat map. And indeed, Amazon leading the way. Let's move on to NVIDIA. And we have looked at a lot of semiconductors companies over the last few months as an area of relative outperformance, both XLK to the SPY, but also the semiconductors index within the technology sector. So here we are with NVIDIA gapping up this week.
Yeah, I mean, you everybody can see the chart. It's been an incredible move. It's been primarily supported by the oscillator finding that support at the zero level and the panel below. But it just, when you think maybe you can't go any higher, gaps higher again. We're going to look to see it find support here, hopefully use this gap now as support going forward.
Absolutely. As we know, we don't ever have the ability to predict what happens on the right side of the chart, but holding go trends puts you in a position to take advantage of those kinds of moves. Let's move on. Tesla.
Yeah.
And then we'll take a quick look at Meta and Uber as well.
Yeah, Tesla has been interesting because I know quite a lot of people who have found it painful for most of this year. There's a lot of Tesla is almost I don't know if you agree, Tyler, but it's almost people regard it like Bitcoin, almost like there's some very, very strong feeling towards Tesla and its future due to
maximalist
technology and all the rest of it. But just the real sort of, there's a real belief in Tesla as a stock. So I've been talking to a lot of people over the past few months who have been finding it very painful with the sort of inability of it to take off. But we did get a new go trend again this week, and we are back testing these levels that it has failed at so far this year. So that's going to be interesting because if we can get above those levels, then Tesla could move higher quite significantly.
Absolutely, and I think that's a great reminder to check your bias at the door. Meaning, we don't really worry about what the ticker symbol is, as long as there's liquidity in the underlying security. But I think for those maximalists who have maybe cult-like behaviors around certain CEOs or certain funds or securities, they can get into trouble when they don't follow their trading rules. Let's take a look at Meta. And then in our last few minutes, we'll also take a look at some intraday charts, just so we can cover the full time spectrum.
Yep. So another great chart. We've been pulling these out of those, like you said, those outperforming sectors. So this one is, of course, in the communication sector, and a lot of the traditional aspects of technical analysis playing out here on the chart. We saw that gap. This is obviously turned out to be a runaway gap. And you can see that gap provided some level of support. As we traded back into the gap, we found support, and then off we went again. Now the same thing here. We gapped higher. We found support near the top of the gap, and we've gone higher again, breaking out of a go-no-go squeeze, of course, giving us those trend continuation icons that we've been talking about. But a very strong move out off these lows that saw the go trend take hold back at the end of last year.
Absolutely. And we know that not everyone is trading longer horizons. For those of you who are intraday or shorter term traders, Alex, let's pull up a couple of charts on maybe a 30-minute basis. Let's start with Lucid Group, LCID. And the important lesson here is that any technical toolkit worth its salt is going to work on any time frame. So it's going to work the exact same way, whether these are monthly bars or 30-minute bars. And I think those trading rules, owning go trends and taking advantage of those gap moves, also apply in the reverse.
Yeah.
Lucid Group showed us signs of rolling over, just as regional banks did earlier this year, ahead of a sharp gap down.
Yeah, and I think it's just important to note that you read the chart the same way and all the components interact together to tell the same story. And that's what we're looking for when in trend, that interaction between the oscillator and the trend panel. And you can see that once this oscillator was broken to the downside, that, of course, was a concern for the go trend. And then when it went into a no-go, now we're looking at the zero line as a level of resistance before it gets turned away again.
Absolutely. Let's pull up another one. SoFi Technologies. SOFI is the ticker. A lot of volume on this chart.
Yeah.
Sharp move higher.
Absolutely. And look at the volume. Remember, if you're new to the show, remember that we bake volume into the oscillator, so we don't need another panel. The dark blue of the oscillator tells us that volume has been heavier than its average. So this whole move over the last few days been supported by market participation, which is always important.
And the last one, Carvana. A couple of our friends buying new cars right now. I'm not so sure that the the financing is in their favor, but here we are. People are buying cars.
Absolutely, and you can see the same thing here. Go trend identified, oscillator above zero. We did break into negative territory. That would have been a concern, but if you look at where price found support, it found support at the gap here. Then when it breaks back into positive territory, we see trend continuation in the form of that green circle, and price, of course, races higher over the last day or so.
Absolutely. Alex, as always, a pleasure to talk markets with you. And for those of you watching the GoNoGo show, we are here every Thursday afternoon at 3:30 Eastern time, right on StockChartsTV. And if you're finding this on YouTube, check out the GoNoGo charts channel on YouTube as well. Stay cool, and we'll see you next week.